Good afternoon, everybody. Great to see you all here. Here we are, Tuesday, 16th of June, 2020, for the daily market update. Okay, you're all very welcome. For those watching it for the first time, it's just a 25 minute sprint through what's been going on in the markets in the last 24 hours or so. A couple of stocks and sectors that might be of interest to you, and a look at what, if anything, is setting up for the US session this afternoon. As always, all information provided is for educational purposes only, and trading on margin carries a high level of risk, and you should be aware of all the risks associated with margin trading. So where did we think we'd start today? Oh, well, this is because we didn't really cover this yesterday. Is just looking at the STAM, okay, in terms of the strength trend of the FX markets, okay. What I do every kind of weekend, just to give me a picture snapshot of what's been going on in the markets. And as I was saying on the sort of mastermind session last night, okay. We've had a case of effectively, sort of up until last week, we'd had a sort of a risk on mentality, and invariably that had a knock-on impact on basically the dollar and the yen, and to a lesser extent the Swiss franc, but also on sterling. Okay, sterling and dollar being the bottom of the barrel. And Aussie and Kiwi dollar have been sort of number one and two, okay, for the last couple of weeks. All right, so and you can find your own reasons for that, whether that's just coming out of China, or whether that's coming off the back of just dollar weakness. Whatever narrative suits you, then you can attach it to it. All I'm really interested in is looking at where the market is kind of driving towards. And what we had seen was that so we had seen kind of a lot of buy offers in the kind of in the Aussie and the Kiwis, okay, over the last couple of weeks as that risk on. But we had a bit of a blip there last week, okay, as we talked about that kind of risk off week, and we'll look at now whether that is continuing, or whether that's actually a change of ideas, okay. But the whole idea for me is literally to do it every weekend, okay, just a little bit of a work for about an hour or so, to just give me a snapshot of what the big picture is, okay, across the FX markets, on also across the big indices as well. All right, so in that sense of in sense of basically just allowing, just keeping an eye on what those indices are telling me. All right, and there's it's a little bit of a mixed hodgepodge at the moment, okay, but people have not been trying to kind of work out what the score is, but we'll look at those in a moment to sort of give me to give you a bit of more of an indication of whether we think that indices are taking a bit of a breather, or whether it's just whether it's a chance to roll over. Now, with let me just move on. So we're looking at some of the sectors and stocks. So yesterday we saw a lot of the big stores are opening in the UK yesterday, and considering that for the last few months we've had a huge amount of communication about social distancing and being wary of it, it clearly all got thrown out of the window yesterday when they opened back up Night Town in London. And I'm sure you saw footage from other shopping there, where people were just basically had just ditched coronavirus if they meant they got a pair of trainers on sale. So each their own. It's all about priorities, isn't it? But it's giving us an indication of what's likely to happen. What we're seeing happen is this is XLY, which is an ETF for consumer discretionary. So, as the name implies, it's filled full of companies that people are spending discretionary spend on. So, I think their biggest holding is in Amazon, and then a few of the big names that they've got in the ETF, things like McDonald's, Nike, Target, Starbucks, Home Depot, etc. It's for the American market, but you can see for yourself, okay, that. It's kind of weird in the sense that people have talked about the kind of impact that we're seeing, what we're having, okay, in terms of what coronavirus has had on the markets. But that's very much like a V-shaped recovery, and it's a V-shaped recovery in consumer discretionary. All right, from highs at 132. Right, 132, 133, dropping down to 82. But look at that, kind of in the last week, we kind of just crept our way back through those kind of recent highs. Okay, we did the kind of double bottom 1, 2, 3, okay, that we like to see, and but it's just clambered its way up, but then it kind of dropped $10. All right, so over the last week, that'll be the little bit of the risk off. But I think people are going to be interested. What are the sales figures like? So this afternoon in the US, 1:30, we've got retail sales. So where everyone will have a curious view on that, seeing what impact that will have. Undoubtedly, that'll have an impact on this ETF as well. But it's just kind of a curious look at how people haven't really been able to spend, I suppose, in the same way that they have been, but it hasn't stopped the ETF from rallying high. Okay, so and I'm presuming that's just maybe it's just been dragged north by Amazon and stuff. We don't know, but it's a curious chart for us to look at in the present climate. Looking at other companies that have done well, here's DocuSign. All right, this is definitely like a kind of stock leader during the COVID element. So for those who don't know, the tech company, DocuSign allows you to, basically allows you to get electronic documents, signed and basically effectively proved, which means that you can speed up transactions. Okay, if you need contracts, electronic contracts signed, etc. And the story hadn't been too bad. Okay, they've been chipping away. All right, hitting those highs of about 92, 93 pre-COVID. But only dropped to about 65. All right, it's only lost a third, whereas other companies lost between 50 to 60 to 70%. But COVID has been a bonus for DocuSign, hasn't it? Just look at that from around 65 now, trading up towards 165. Like it's put nearly $100 sprint on there. So that is quite some move there. Okay, that is absolutely astounding. So we've every so often we've done sessions where we've focused primarily on which companies have done well out of COVID, and it's quite clear that these boys have and stuff. So if you foresaw this happening, or if you had that as part of your portfolio, then congratulations, well done. All right, that's a cracking move, absolutely a superb move. And this is another one. This is the last one. Okay, I think it's the last one for today. This is called NEO. So I think I'm pronouncing that right, but it's possibly wrong. NEO, if you didn't know of them, NEO are an electric car maker, and there are lots of rumors and talks about it being a rival to Tesla. So it only IPO'd in October 19, and it was pretty, do you know what I mean? It didn't exactly set the world alight, right? So when it's sort of what was that kind of IPOing at 6? All right, okay, yep, it jumped to 14, probably thereafter, but then you can see for yourself it just dropped. But I suppose last year, if you wanted to buy an electric car maker, the money was all in Tesla. So so you can see yourself that basically this just drifted down, and I'm kind of what I'm seeing here is. This is a bit of a kind of an inverse head and shoulders kind of occurring here. And what we can see is that it's back up above its kind of IPO price at 6. All right. And now, it's had a good couple of weeks. So, it might be something to keep, an eye on. Okay. So all the people who can't afford Tesla at 1,000 or 900 or whatever, this might be the opportunity to, this might just do well out of all the people who were late to the Tesla party. So, maybe want to sort of keep a look at going further ahead. So I think that's let's move across to the charts. Okay, so as always, as I say, if there's something you want me to have a little look at or take a glance at, I'm happy to. I don't consider myself an equity specialist, but I just show you what I can see on the chart there. Okay, and I think it makes it kind of interesting to have a look at all the amazing moves that we've seen over the last couple of months. So looking at US indices, yesterday, let's do it on the Dow. Right, yesterday we talked about how we had a big sell-off Thursday. Friday we had tried to sell off again, but it kind of clawed its way back up and kept itself above 25,000. But we'd had a Sunday night gap down, and the European session had been pretty miserable. And then invariably, as the American session came in, we had a bit of a change, and you can see that actually, we had a bit of a quite some rally there across the US indices. All right, so there was elements of a lower counts in the US. Weirdly, also the fact that there was the kind of the news, COVID news, was not in America but was in China. Maybe that's just a swing of it, but also the talk of I think Trump sort of saying that they are going to do a $1 trillion infrastructure deal, which to be honest is what he said when he first came in that he wanted to do. So that had all of that had a bit of a bonus, okay, and a few other elements that sort of just dragged those kind of dragged the American indexes stronger last night, okay, and that carried over into Asia and it carried over into Europe this morning, which we'll look at in a moment. But if I look at there at the moment, so here's the Nasdaq on the daily chart, and where we that was kind of like Thursdays or right Fridays, but yesterday, as you can see, we pushed to new lows and closed closed higher than the previous day's close, and we also closed higher than the kind of the recent all-time highs. So it wasn't a key reversal or an engulfing candle, but there's quite a thrust gone on there. Okay, quite a change as we go down to the 1 hour chart. You can see that it's just literally launched itself there. Okay. So you'd be looking at seeing like, well, okay, what's that going to do this afternoon? The S&P 500 wasn't as well. It did do the same thing, but not as bracing. This is the 4 hour chart. So from last week's tumble, okay, yesterday's, we kind of rallied up, and now we're just looking to see. Want to see it on the 4 hour chart. I'd want to see it back above that 50 period moving average. Okay, that's where I'd want to see it. So we'll see. Maybe retail sales this afternoon will give it the kind of put the wind in the sails, pun intended, or it will just literally it'll be like a damp squib, okay, and it'll drop it. So so there was strength there back into US indices yesterday. It's it's a real element of just buy the effing dip, all right, okay, and that'll work until the day it doesn't. But as we look at European indices, okay, that had the kind of same effect. Okay, the DAX, having had its drift down, all right, did a really kind of nice, that some people might even call that a version of a morning star formation yesterday. This is the hourly chart on the DAX before it rallied up, and this morning did have a rally. It kind of drifted down a bit, but but it's still just churning its way north, and we'll want to see whether the Americans can take that higher or whether retail sales will do for it. If we look at the FTSE yesterday, we were talking about how last week, this is the 4 hour chart on the FTSE. The FTSE had collapsed, okay, but it managed to close above 6,000, all right? It managed to bounce its way back up. Yesterday, it kind of came down and beneath it again, but it kind of was closing its days just above it. And that's, I look at that as a bit of a double W there, okay? There's a double bottom there happened at the 200 period moving average at the 6,000 level as well, okay? Is that a case of that being quite strong support there at the moment? But a lot of that will be based on the Americans. And if, the CAC, okay, the IBEX and the likes, and even the Euro stocks, they've all done pretty much the same thing. Okay, they're all much of a muchness. Okay, they all followed that American lead into the afternoon and then into this morning. So if we have a switch across to a bit of FX here, okay, let's start with the dollar. Right, as always, dollar index. So after the nice trend we've had down, glorious trend. We're in a bit of we're in a little bit of a bit of a chop at the moment. I said yesterday, let's bring up the tool. All right, I said yesterday that let's get the drawing tool on here. That I wanted, we were up here yesterday, and I said that I wanted to see us come back down, okay, which we've done, and see, could that now form a bit of an inverse head and shoulders? It seems around about 96.50. Oops, there you go, about 96.50. Okay, so let's just see. What I'd be wanting to see is, let's just get this out of the way here. What I'd be wanting to see is a case of, how price reacts. Okay, when price and the moving averages are all together, okay, you're always interested to see. Of course, if it fires its way up, all right, back up towards this 200 period moving average, well then we can say that the that inverse head and shoulders has played out nicely. So just to see how that runs this afternoon. Looking at when you look at on the flip side of it in the euro dollar, so Euro dollar 4 hour charts here. Yeah, it was in a great uptrend. Okay, had a bit of an ultimate high here. Okay, and we broke some elements of market structure, and as I said, it's done the opposite of the Dixie. Okay, which is what we want. And we're just looking now. Okay, is that all right? Is that a head and shoulders pattern that's forming there? Okay, this morning it's got up there and it's kind of reversed off it, so quite nicely so far. So once again, you're just going to want to see, is that going to get closing beneath those 20 and 50, and then you're running down to you're running down to your kind of next level. All right, and then you'd be looking at, I think be looking down here about that 111 area. Okay, that's would be if it can work its way down there. With that in mind, dollar yen, some people like it. It's it kind of rolled, and now it's gone back into that kind of last few days. It's just gone back into its range of doing very, very little. The only thing I'd pick up on is that it's it's pivoting around the 200 period moving average. The 20 period is underneath it and pointing up. The 50 is coming down to close to it. So I'd say that it's coiling up a bit. Okay, it's coiling up, waiting for its next move, like we saw last week, where it exploded out. Cable, well, we'll look at that in a moment. Anyway, dollar Swiss franc, all right, yeah, dropped to the lows last week. We had a really good rally up off it, and it's coming down now. And now I'm looking at, how is this price reacting to the 20 period moving average here? Okay, it's come back into this area, and I'll be looking to see how does that react? Okay, does that fail? In which case, we're down towards double bottoms, which would actually give us an indication of sort of dollar weakness, or do we pop our way back up? Okay, and as an element of dollar strength. Looking at what were the glorious ones in kind of Aussie. All right, so let's go to Aussie dollar on the daily chart. Okay, the daily chart, we've talked about it. We looked at it. Bosh, nice move up, nice run. We go down to the 4 hour chart. We had that kind of ultimate high last week. All right, we've had kind of lots of push to the highs. Got a drop to the low, and now we're in a bit of a no man's land. Is this a bit of a scruffy head and shoulders pattern forming, right? Or is that actually a W there where it's a little bit, it's a little bit undecided at the moment. So I would just be watching that, even though Aussie is strong and dollar's weak. Okay, a lot of it is still driven by what the dollar decides to do. So we might get a little drop down there for the afternoon, right? Drop down there for the afternoon, but I'd be still waiting to see the real clarity. And Kiwi dollar, which has been top, has been doing the same as well. Okay, it just after that kind of overextended top. All right, last week 4 hour chart, double top. Drifted down, has put in a bit of a double bottom with a false breakout there, okay, and has drifted up. And now you're looking to see, well, is it going to, where's it going to go from here? So we'll keep an eye on that this afternoon. And let's finish off with sterling, shall we? Okay, sterling's had a bit of a kind of a mixed, pattern. All right, so we already looked at the FTSE. If we look at cable here, let's bring this out. Okay, cable has been although we've had a bit of a pullback, it's still an uptrend. It hit the daily 20 and bounced off it kind of yesterday. That's where we saw. And the kind of 4 hour chart, the end of last week was a nice run, but we had that kind of false breakout and we're pushed higher. We're back up above the 4 hour 50 period moving average. Yesterday's session, really, we just dropped down. Okay, dropped to a new low, sucked up all the orders, and then basically off it went. All right, off it flew. So it's messy today. If I go down to the 15-minute chart, okay, it was a bit messy. Although this is kind of a Vulcan setup here, okay, which is just the short straight into the session. Okay, pounding at stars not normally like that, but it's this morning it was. Euro against sterling. That was kind of an interesting setup there. We kind of sold off overnight into Asian session. So but we started the European session, really rallied up, but then we put in like a double top here, 1, 2, 3 formation, and prices just continued to drift down from that. It's actually, it's kind of nice there, kind of very nice move. We're beneath that 1 hour 200 period moving average now, right? So it's yeah, and what you're looking is here was the high, okay, where was the high, and then you've had other highs on the way down, okay, as prices continue to sort of drift its way down there, okay, euro against euro, a little bit of euro weakness and sterling strength there. And that was reflected, because pound against Swiss franc did exactly the same as kind of pound against dollar. It started off the day with actually kind of a nice move, a nice sort of Vulcan setup, and then it just drifted its way down, okay, quite nicely towards yesterday's highs where it sat at the moment. So, not unsurprisingly, kind of euro sterling, okay, is euro sterling and pound Swiss are normally quite correlated in their moves, but today was kind of kind of a bit of an interesting way on the way that played out. I know some of the guys were still short on pound against yen. All right, okay, up to the 140 level. Okay, last week, and came away from that on the daily chart, on the 4-hourly chart. This was head and shoulders we talked about last week. All right, and then it just drifted down, and it did a little bit like what a lot of the sterling pairs did. It put in that kind of, it's like a W with a kind of a false breakout with a key reversal engulfing, and it's just rallied its way strongly from there. And now we're all sat thinking, right, well, okay, where do we go from here? All right, what's the move here? Okay, everybody, just sit and wait and hold tight and see what the scores and the doors are there. All right, so there you go, ladies and gentlemen. It's always supposed to be a bit fast and furious, okay, and a little bit of a race through. I hope you found that useful. I hope you found it helps you in your own trading this afternoon. Remember, it's US sales, okay, retail sales at 1:30, and a couple other bits, odds and sods of news coming out. So make sure that make sure that you're managing risk as always. And I'll be back tomorrow, 12:30, okay, same time, same place. And until then, good trading, everybody. All right, trade well. Cheers.